What if I told you that the money in your pocket right now is not just paper and ink, but the result of a 500-year-old financial illusion? A trick created centuries ago by men who never imagined the United States would one day be the center of their idea. A trick so powerful that today, every American, every parent, every student, every worker is unknowingly playing a game those old bankers designed. This isn't fiction. This isn't a conspiracy. This is a forgotten piece of history that still decides the price of your house, your groceries, your car, your debt, your savings, and even your dreams. Let's go back, far back, before America existed. It's the 1500s. Europe is exploding with wars, discoveries, and ambition. Kings want more land. Explorers want more ships. Armies need more weapons. But there's one problem. Gold is running out. Gold was the heart of money back then. If a king didn't have enough gold, he simply couldn't wage a war. And trust me, kings always wanted war. So a few brilliant, some say dangerous, banking families came up with something new. A way to expand money without finding more gold. A way to fund wars, build empires, and gain power by creating money from thin air. It started simply. People would deposit gold into a bank. The bank would give them a paper receipt for it. Soon, people realized they didn't need to carry the heavy gold. The paper receipt was enough to trade with. And that's when the bankers saw a loophole. Most people didn't come back for their gold at the same time. So bankers began giving out more paper receipts than the gold they actually had. More money than real wealth. This was the birth of fractional money, the hidden engine of today's economy. At first, it looked harmless, but slowly, it gave banks a weapon no army ever had: the power to control kings. Kings needed money for wars. Bankers had paper money. Kings took loans. And suddenly, kingdoms were drowning in debt. For the first time, rulers realized something terrifying. You can win a battlefield and still lose your country to debt. This ancient money trick grew. It spread from Venice to Amsterdam, from Amsterdam to London, and then finally, centuries later, across the Atlantic Ocean, to America. When the United States was young, money was chaos. Every state printed its own version. Some backed it with gold, some didn't. It was confusing and unstable. And in the middle of this, two men clashed over America's financial future. Alexander Hamilton wanted a national bank, a system based on that same European model. Private bankers would create money. The government would borrow it. The people would pay interest through taxes. Thomas Jefferson hated this idea. He believed that if bankers controlled money, they would eventually control America itself. He warned that private money creators could one day become more powerful than the elected government. But Hamilton won the battle, and America's money began shifting toward that 500-year-old system. Still, it didn't fully take over until 1913, when the Federal Reserve was created. A mysterious group of bankers and politicians met secretly on an island called Jekyll Island and designed what would become the modern U.S. financial system. From that moment, the U.S. didn't depend on gold. It depended on credit, on interest rates, on debt. Then came 1971. President Nixon made a decision that changed every American's wallet forever. He removed the dollar from the gold standard. And in that moment, money became something new, something ancient yet modern, something powerful yet fragile. Money became a belief system. A dollar was no longer a piece of gold you don't see. It became a promise backed by trust. But trust is a tricky thing. To maintain trust, the system must always grow. And to grow, it needs inflation. And to fuel inflation, money must constantly lose value. That's why $100 today doesn't buy what $100 did in 1970, or 1990, or even This is not a mistake. This is the design. When money is created through debt, the amount of debt must always be larger than the money in circulation. That means inflation isn't just likely, it's required. It explains why. Homes that cost $15,000 in the 60s now cost $300,000. College tuition that was $500 a semester is now $15,000. Groceries, cars, healthcare, all rising faster than wages. Most Americans feel like they're falling behind, not because they're doing anything wrong, but because the system quietly pulls money away from them every year. Now here's the twist most people never hear. The wealthy love inflation, not because things become more expensive, but because their assets rise in value while their old debt becomes cheaper. Imagine borrowing $1 million today and repaying it 20 years later with dollars worth half as much. That's the hidden advantage the wealthy use. Meanwhile, the average American is told to save money, even though saved money loses power every single year. This is the 500-year-old secret in action. Money created from nothing, debt that never ends, prices that always rise, and a system that rewards those who borrow, not those who save. Look at the money in your wallet right now. It feels solid. It feels real. But it's an idea. The same idea invented centuries ago by bankers who realized trust is more powerful than gold. Every time you swipe your card, every time you pay a loan, every time you watch prices go up, you're feeling the ripple effects of a decision made half a millennium ago. But knowing the truth gives you an advantage. Because once you understand how the system works, you can stop being a player and start being a strategist. The wealthy aren't magicians. They simply understand the rules of the game. Own assets. Use debt wisely. Keep cash low. Let inflation work for you, not against you. Most people never learn this, but you just did. If you want more mind-blowing financial stories, more hidden truths about money, and more guides on how to use the system instead of being crushed by it, leave a comment telling me what you want to learn next. And don't forget to subscribe for more videos like this. Your financial journey begins the moment you understand how the past still controls your wallet today.